Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
3 ships carrying ethanol were heading to China from the U.S. Gulf Coast, 3 trade sources told Reuters on Monday, in a sign that exports of the fuel were sharply increasing from the United States to the country. The shipments may surpass the total amount of U.S. ethanol that China imported last year, a positive development for the U.S. ethanol industry, which has seen decreased demand because of the coronavirus pandemic and the U.S.-China trade war. The ships each have a capacity of around 30,000 tons, or about 240,000 barrels of ethanol, the sources said, though the exact amount of the renewable fuel on board was not immediately clear.
India's palm oil imports are set to rebound in March and April to meet rising demand from hotels and restaurants, as lower shipments last month have depleted stocks, according to industry participants. Higher imports by India, the world's biggest buyer of the edible oil, is likely to support benchmark Malaysian palm oil prices that hit their highest level in a decade on Monday. India's palm oil imports in February fell to around 400,000 tons to its lowest in 10 months, as sellers were offering steep discounts for shipments in March and April over prompt delivery, said Sudhakar Desai, president of the Indian Vegetable Oil Producers Association.
Moving on to the top news in the energy sector.
India has asked state refiners to speed up the diversification of oil imports to gradually cut their dependence on the Middle East after OPEC Plus decided last week to largely continue production cuts in April, 2 sources said. India, the world's third biggest oil importer and consumer, imports about 84% of its overall crude needs, with over 60% of that coming from Middle Eastern countries, which are typically cheaper than those from the West. Most of the OPEC Plus producers, led by world's top exporter Saudi Arabia, last week decided to extend most output curbs into April.
Oil fell to around $68 a barrel on Tuesday in a choppy session, as easing concern of a supply disruption in Saudi Arabia and U.S. dollar strength countered the prospects for tighter supply due to OPEC Plus output curbs. Crude hit its highest since the start of the pandemic on Monday after Yemen's Houthi forces fired drones and missiles at Saudi oil sites on Sunday. But Saudi Arabia said it thwarted the strike and prices slipped as supply fears eased. Brent crude was down 18 cents, or 0.3%, at $68.06 by 14:50 GMT, pulling back after trading as high as $69.33. It reached $71.38 on Monday, the highest since January 8, 2020. Next, we have the top news in metal markets. The head of China's base metals body on Tuesday said the industry should pay close attention to the risk of speculators driving prices away from fundamentals, warning that sharp fluctuations would do more harm than good. Zhe Honglin, secretary of the party committee at the China Non-Ferrous Metals Industry Association, made the comments as base metals including copper, nickel and aluminium fell sharply after hitting multi-year highs in February. Zhe, a delegate at the ongoing Chinese People's Political Consultative Conference in Beijing, said the metals rally in early 2021 was partly driven by supply and demand fundamentals as well as expectations of a global economic recovery, but did not rule out speculators had played a role.
Both lithium and cobalt markets spent the last 2 years absorbing the glut of supply that followed the price boom of 2017-2018. Low prices and turgid trading conditions caused producers collectively to slam the brakes on expansion plans. Both metals, however, have jumped back to life in 2021, with prices rallying hard in January and February. The booster has come from a resurgent electric vehicle (EV) sector, which has defied the broader global downturn in automotive sales.
We will now look at the top news in the agricultural sector.
Argentine wheat sowing is likely fall this year as farmers calculate the risk of state intervention in the market, while new Chinese demand for South American feed barley is expected to induce some growers to switch crops. China's usual barley supplier Australia has been sidelined due to a bilateral trade dispute. This leaves Argentina as a key supplier, along with France and Canada, to the world's top commodities importer. Wheat and barley compete for sowing area on Argentina's Pampas grains belt. Both are planted around mid-year. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.